Georgina Taylor, equity strategist at Legal General, joins us now. Thank you so much for coming in the studio, Georgina. Now, in terms of what we've seen, it does seem that a little bit more risk appetite is coming on the table, despite what we've seen in Dubai and the debt saga there.
It's very interesting, actually. There was such a short-lived reaction to that in the developed world, and I think it was very much about risk appetite, repricing of risk last week, and now we've said that that's contained in Dubai. We don't think there's a contagion effect, and therefore the European, US markets have done pretty well in the last couple of days. So.
We've had quite a rally since March, and a lot of investors, a lot of market experts have said we're going to have a correction, we're going to have a correction, we're going to have a correction, and we're now almost at the holiday season, and we haven't really had a correction. What will it take?
I think, in my view, I think it's going to be about the removal of liquidity. I think all the economic data is still on track. We're still seeing some signs of recovery. We don't really know how much of that just is due to the amount of liquidity that's being pumped into the system, and I think when policymakers start commenting on exit strategies, etc., I think that's a little bit of a risk. But to be honest, I think that's really pushed into next year now. So I think in our view, it's really the markets will probably do pretty well going into year end. Mix of the economic data and liquidity remaining very, very loose.
We may expect some signs tomorrow from Jean-Claude Trichet of the ECB saying that, well, they're looking at maybe starting to talk about exit strategies. Is that something that you're going to be watching very closely and possibly take out some of? Would you take out some of the money that you have on markets? Or?
I think not, to be honest. I mean, I think it would have to be, I think if the Fed started to comment, if we've got the UK, if it was very much a coordinated, set of comments that came through suggesting that liquidity really was going to be removed. I think a few comments surrounding exit strategies tomorrow. I think actually the market is in the mood that all news is good news currently, and therefore I think, as I say, risk appetite is back, and I think that'll continue into year end.
Into year end and into 2010, or is this pushing it a bit too far?
Unfortunately, probably pushing it a little bit too far. I mean, markets have performed incredibly well since March, and I think going into next year there will be a period where we sit back and think, how long can this continue for? Is the economic recovery really sustainable? And we may get a bit of a rolling over of some of the economic data early in 2010, coupled with these liquidity and policy comments, and that may just prompt the market to have a little bit of a setback.
Georgina, your top three picks in terms of sectors, what are you looking at? Valuations? Are you looking to scoop up cheap bargains at the moment?
I think it's really almost this barbell approach to the exposure that you want in any portfolio, and I think yield is incredibly important, and I think 12 months ago you couldn't believe dividend numbers, and I think now you can believe them. So that may push you towards, say, the oil sector and some of the higher yielding sectors in the market, and also commodities are getting a general boost at the moment anyway. I think also revenue exposure wise, you do want that emerging market exposure. So again, it brings you back to some of the mining companies, and looking at where you have that mixed exposure and really can gain access to that higher growth in the emerging market region.
The one sector you'd absolutely stay away from?
I think at the moment, I think some of the defensive areas that really unpaid, something like utilities, I see as pretty high risk in terms of regulation, not really got any kind of growth boost. That would probably be my area where I would steer clear right now.
All right, Georgina, thank you so much for that. Georgina Taylor there from Legal General.